We've been talking about gold as an inflation hedge, but how well does it measure up after factoring in inflation? Mohammed writes in from Saudi Arabia. Doctor, yes. In 1913, U.S. CPI was 9.8, measured against the benchmark of 100 marker in 82, 83, 84. Gold in 1913 was $20.60. So if CPI today is 215, he's a wonk here. You can see that. The fair price of gold should be 450 to 550, but we're 100% above that. Agree? Well, he's done his math. I don't know if you agree with his math, though.
I disagree to some extent because probably the CPI understated the true level of cost increases, and also say over longer periods of time. Let's say you take 1970, the price of gold was $35 an ounce. It's now over 1,000, so it's up 30 times. And in the meantime, let's say if you invested your money at 8% per annum in US dollars, compound semi-annual coupon, you would have something like a gain of 25 times. So basically gold keeps up with inflation in the longer run, but it's not the best investment. And we have to understand that inflation cannot only be measured by consumer prices. Say if someone writes from Saudi Arabia, he should look once what the price of land was in 1913 in Saudi Arabia and what it is worth today.
What was it in 1913?
Well, basically, probably nothing.
It was
you could
sand,
just
right?
take it, sand, yes. So all I'm saying is there are lots of things that have actually outperformed the gold, including equities over longer periods of time. So I could argue equities are way overvalued. Say inflation adjusted, the stock market in America is quite high, and inflation adjusted, actually the price of gold is still quite low. It's at half the level it was in 1980.
That's a good point there. Yeah, it's not terribly expensive, is it? I mean, it really is not expensive. You have to stretch it, though.
If interest rates are zero, it's very difficult to value anything. I don't know whether oil is expensive at 70. My impression, given that we have Mr. Bernanke at the Fed, is that oil will be higher in 5-10 years' time than it is today.
Thanks to the Fed.
I beg your pardon?
Thanks to the Fed.
Yes, partly thanks to the Fed, and also partly because of demand-supply dynamics. You've seen car sales in China. In India it will be the same, so the demand for crude will increase over time.
And they're getting cheaper, too. You can get yourself a $2,500 stripper in India, the Nano. I'm talking about the Nano?
Oh, I see.
The Tata Nano. Okay, let me stick with this theme here. Kurt writes in from my hometown, Seattle, Washington. You been there, Emerald City?
Yes,
it's gorgeous. It rains too much, though. That's why I left. How might gold perform in a significant deflationary environment? I mean, there are some presumptions here, obviously.
Yes, first of all, I'd like to make a very clear statement. I will believe in deflation once we have an extended period of US dollar strength. US dollar weakness is a symptom of inflation in the system, so that should be clear. So until the dollar really strengthens, we will have more inflationary pressures in the world as defined by increase in the quantity of money and credit than deflationary pressures. But in deflation, the point is that gold goes down less than other assets. It outperforms other assets in deflationary times.
Okay.
Say gold could drop 30% in a deflation, and the stock market could drop 70%.
Let me slide into another asset class here, silver. Dana writes in from Tampa, Florida. What is your prognosis on investing in silver, since gold may be pricey on a nominal basis to the average investor? I mean, there's a certain discord, when it goes from 500 to 1,000. I mean, there's a certain barrier to action there. What about silver? What do we have, 17 or something?
Look at the quantity of money that has been created by the Federal Reserve. And look at the health care plan and so forth. So I don't think that gold is terribly expensive, but I think that silver may have, in the next, say, 12 months, somewhat more upside potential than gold, and it has outperformed gold so far this year by a significant margin. I think if you want to now invest in resources, I would look actually at exploration companies. The exploration companies, the mining companies, are quite inexpensive.
Okay, several in Canada, I believe, right? Canada,
Australia, US, yes.
Okay, where could silver go? Is this a $30 asset, do you think? I have